Church and nonprofit financing explained. And churches and nonprofit organizations often face unique challenges when seeking financing for real estate acquisitions or facility expansions, renovations, refinancing, or new construction projects. Unlike traditional businesses, churches and nonprofits typically rely on donations, grants, membership contributions, and fundraising efforts rather than conventional operating income. The good news is that specialized financing programs exist specifically for churches, religious organizations, schools, ministries, and nonprofit entities. And at CommLoan, we help churches and nonprofits navigate the lending landscape by connecting borrowers with hundreds of financing sources through our Cupid technology platform, which provides access to banks, credit unions, debt funds, agency lenders, and specialty lenders nationwide. What types of projects can churches finance? Well, church financing can be used for the purchase of an existing church building, acquiring land for future development, ground up church construction, sanctuary expansions, educational facilities, fellowship halls, administrative offices, student ministry buildings, daycare facilities, community centers, to refinance existing debts or capital improvements and renovations. And many lenders view established churches as stable borrowers due to consistent donor support and community involvement. So let's talk about some common church financing programs. Traditional bank loans, and many community and regional banks actively lend to churches and religious organizations. And typical terms includes a 20 to 30% down payment, 15 to 25-year amortization with fixed rate periods of 3, 5, 7, or 10 years, and competitive interest rates and relationship-based underwriting. And these loans work well for established congregations with strong financial statements and operating history. Credit union financing. And credit unions frequently offer attractive terms to churches and nonprofits because of their community-focused mission. And some benefits may include lower fees, flexible underwriting, competitive rates, local decision-making, personalized service. Nonprofit and religious institution lenders. So several specialty lenders focus exclusively on financing for churches, religious schools, ministries, faith-based organizations, and community organizations. And these lenders understand tithing income and donation trends and fundraising campaigns and membership growth and mission-based operations. And this specialized knowledge often allows them to approve transactions that traditional lenders may decline or be gun-shy on. Construction financing. For churches building new facilities, construction financing is often structured in two phases. You have the construction phase, where you have interest-only payments, funds advanced as construction progresses on, and draw schedules are tied to milestones. And then there's permanent financing. Once construction is complete, the loan is converted over to long-term financing with lower monthly payments, or fixed or adjustable rates can be available. What do lenders look for? Well, membership stability. Lenders evaluate your congregation size, historical attendance, membership trends, and community engagement. And growing congregations generally receive more favorable financing terms. Financial strength. Lenders typically review 3 years of financial statements, donation history, operating budgets, cash reserves, existing debt obligations. Leadership experience. So strong leadership does matter, and lenders often evaluate pastoral tenure, the board governance, financial oversight, and organizational stability. Property value. The real estate itself remains an important component of the approval process. So lenders will review appraisals and market demand and property condition and alternative use potential and location characteristics. Typical down payment requirements. And church financing down payments generally range from, for an existing facility, say 20 to 30%, an expansion project 15 to 25%, a land purchase 25 to 40%, or construction project 20 to 35%. and each lender's requirements vary based on the risk profile and borrower strength. Challenges churches face today. In today's lending environment presents several challenges: higher interest rates, increased construction cost, and more conservative underwriting, rising insurance expenses, but also inflationary pressures. However, financing remains available for qualified organizations with strong financials and clear growth plans. Why work with CommLoan? Well, finding the right church lender can be difficult because every institution has different lending criteria. And CommLoan's Cupid technology allows borrowers to access a nationwide network of more than 700 lending sources and identify lenders that fit their specific product needs. Whether you're purchasing your first facility, refinancing existing debt, building a larger sanctuary, or expanding ministry operations, having access to multiple financing options can dramatically improve your chances of securing favorable loan terms. Final thoughts for the day. Church and nonprofit financing is not a one-size-fits-all process. Every congregation, ministry, and organization has unique financial characteristics and growth objectives. The key is partnering with financial professionals who understand both commercial real estate lending, but also the specialized needs of faith-based organizations. And with the right lender and loan structure, churches and nonprofits can secure the capital necessary to grow their mission, expand their impact, and better serve their communities for generations to come. That's it for the day. Please visit my website, billrapp.comloan.com. You could start a pricing or a request, but you can also schedule a consultation so we can have a conversation. I look forward to that day. Thank you for watching.